By far, one of the most exciting topics that everyone want to discuss is a smart money concept. In fact, smart money is the main driver of the market. As a retail trader, we cannot move even a single pip if we trade all together. So to make money from the market like the smart trader are doing every day, in this video I'm going to discuss about everything you need to know about the smart money concept. How you can understand where the smart money buying and selling, and you can do the same so that you can make money with the big boys. Before I begin this video, make sure you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay guys, so first let's find out what is in fact a smart money concept. What is the definition? Now if you Google it or go to the Investopedia, you might find a lot of information, sometimes that might confuse you. For me, the easiest way to understand a smart money concept or the definition of a smart money concept is a zone or level where the smart money is buying or selling in the market. So in fact, this is the most important thing as a trader you need to know, right? Where they are buying and selling so that we can buy and sell from the same zone in the same direction. So let's first of all find out what is in fact supply and demand and where the smart money is buying in this supply and demand zone. Let's look at a couple of examples and so that you understand exactly how to apply this concept in your trading. Okay, so let's look at this smart money concept on gold on the 4-hour time frame, and this example will give you a clear idea how the smart money works. So first of all, let's draw this trend line here. Okay, we see that gold has created this structure. Now what do you see that in this gold market, what you have seen, the price has broken out of this structure completely to the downside, has gone up to this level, created this high, and then has broken down, again has gone up, again rejected. Finally we have seen with this long bullish engulfer, the price has completely broken out of this structure. Now how the smart money then applies in this zone? Now see how the price has done. Once you saw that this level, if you extend this line, what do you see that if the price, since the price has broken that level, what do you see that the price has gone to this resistance zone, okay, and from that level we have seen again the price has broken down, has gone up again. Now what in fact this bounce meaning is that when the price is going there, smart money is selling this market, okay, created this move, again the price has gone there, again created this move to the downside. So whenever the price is going there, the price is dropping. That means that for a smart money here so far, this level is a supply zone, okay, a supply zone where they can sell this market. Okay, now once you found that zone, the big boys are selling. What you saw that finally with this long big bullish engulfer, this level is broken. Now when this level is broken, as you know that in the past this zone acted here as a supply zone, right? Big boys has an interest to sell this market from this zone. But what happened with this big long bullish engulfer? They bought this market in such a high momentum that this supply zone has broken, the price has gone up, closed above. Now at some point what we have seen, the price has gone up well above and then come back to the same level, and that zone, this where this level acted here as a supply zone in the past, now the same zone is acting here as a demand zone. This is the key concept of smart money. What do I mean by demand zone? Now see how the price action has formed. Whenever the price is hitting that zone, creating a long wick candle, the price is dropping, right? So the price the smart money is selling, but once they have broken this market, this level, now they don't have any more interest to sell that zone. Instead, from the same level, they are buying. How do you know? If you closely look at the candles, okay, you see that long wick candles with series of higher low has been created, which is in fact a huge buying happened from here. And this is where the big boys bought this market. The reason is this is where the smart money coming to the zone where there is a high demand for gold in this zone. And as a result, we have seen this big move happen with this, you can see that there was a big move happen and the price has broken all this structure. Again, smart money sold this market from here, and then what you saw that the same level is acting exactly in the same way. So every time the price was coming to this zone, creating series of higher low, even with this long wick candle, and slowly the price has gone up. So this is the key concept of understanding the smart money concept. So how do you understand the smart money concept? By understanding the key level of supply and demand zone. Keep in mind that when a level act as a supply zone and has broken down, and then this level is being acted as a demand zone, you see the series of higher low has been created, long wick candle created, multiple test. That is where the pricing is, and that is where the smart money buying. And as a smart trader, this is the right place to open, buy or sell position. Let's look at a couple of examples and then it will be clear to you, and then we'll look at some of liquidity example in a smart money concept. Okay, let's look at the same example on gold in a bearish market. So what do we see? That the price was in a long-term uptrend and then finally came to a zone where there was a long consolidation, and we have seen primarily has broken to the upside and finally has broken down from this level, where we see that in the past the same zone, this level acted here as a supply demand zone where the smart money was buying, created this big move to the upside, has broken down again, has completely dropped to the downside, broken this previous support, which is the previous demand zone. Now when this level has broken, what you saw that, look at this with this doji, the price has penetrated that zone where there was the previous demand zone, turned now support zone, supply zone, and from that supply zone we saw that series of lower high is been created. Every time the price was approaching this zone, which is the support here, resistance here, resistance here, resistance here, the price was approaching that level, creating series of lower high. So what does it mean? It means that smart money was interested to buy from this level, and once this level is broken, now smart money interested to sell this market. Okay, and the way you understand is every time the bulls trying to push the price high, they are creating series of lower high, which is in fact a sign that smart money is selling this market. As a retail trader, when we see that, we know that smart money is selling this market, let's sell the market and then find a good trading opportunity to take a big trend to the downside. You see that, and afterwards there was a big move happen, and that is the key concept need to understand as a retail trader. So this is the supply and demand zone where the big boys or smart money buying and selling. Now let's look at some of the examples that you can apply in terms of liquidity. So in terms of liquidity, what is in fact liquidity? Okay, keep in mind that liquidity is the fuel of the market. Like the car that you are driving, you need some fuel to move the car. In the similar way, liquidity is needed to move the market. And where the liquidity is where the most amount of orders and stop losses. So let's now understand how liquidity works so that we understand how the market moves in terms of liquidity. Once you understand, you're almost 70% ahead in your game of trading. In fact, liquidity is my favorite concept that I apply in my trading every day. Okay, so let's look at this example in the same way in the gold. Now keep in mind that this concept is applicable in every instrument, Forex, crypto, indices, everywhere. So what do we see that in this example? Let's see what happened here. You see that there is a big move on gold, a strong impulse. Now let's replay the chart and try to understand what is liquidity in terms of smart money concept. So what do you see that? See the price tried to break this high, instead created a bearish engulfer, and then the price was consolidating. Okay, so this is a typical market structure. As you can see, always you'll see that. So what you have seen that in fact gold market, you can see the price is breaking to the upside. Now what you saw after this kind of big move, when you see this kind of consolidation, and in that consolidation you saw that there is one bearish engulfer, big bearish engulfer, there is another one long bearish engulfer, back to back, two strong bearish engulfer, and the price finally has broken that resistance, which is in fact the very smart trader will try to buy here, because when you see a market like that, okay, a big bullish market consolidation, okay, couple of times liquidity gap from here and then has broken out, this is a typical continuation pattern. When you see a market like that, it's a continuation pattern. Right now you see that the price has broken down. Even I also will be interested in buying this market, but in fact what happened, look at that. Now after that breaking to the upside, everyone is dodged. Okay, what we see that the price has immediately has broken down. Now see what happened. This is the zone where everyone was interested to buy. This is the candle everyone bought, most retail trader, and most of the traders stop loss just below this candle. Okay, this is the doji, and everyone who bought this market from here, let's say everyone has gone long, stop loss below this low like everyone else, and probably everyone was 3 to 1, 2 to 1 risk to reward ratio trade. Now what happened, the price has gone up, it didn't reach that far, immediately has come back and just crossed the previous doji's low, closed above, and then the price started to move. Amazing, isn't it? This zone is so important is because when everyone was buying from here, keeping a stop loss below this low, everyone's stop loss is in fact a sell order, and that is what a smart money need, right? Because when the market drop below this level where there is a lot of order, that buyers forced to become a seller, and when there is a seller on the other side, smart money bought this market. Okay, when a smart money bought, that's the commitment that the price will move up, and this is the liquidity gap that we talk about all the time. So liquidity gap is when you see an important level where everyone in the past was interested to buy or sell is violated, and then has gone again to the range or to the direction, hitting most of the stop loss. That is where the most amount of money comes from, and that is the best place I love to trade. And as you can see that afterwards there has been in fact a giant move right after this one here, and that is the key concept of understanding liquidity in terms of smart money. And once you wait and you see that the same thing happened here also, this is the new candle, probably you remember, exactly in the same way has crossed quite a few candles low and then grab liquidity that we talk all the time, liquidity, and then the price has gone up strongly to the upside. So this is what smart money love to do, grabbing liquidity and then the price move in the direction. And once you understand it, it becomes much easier for you to make the best trading decision possible. Okay, so let's look at this example on gold. This is the recent chart, and probably you have seen my weekly forex forecast. This is what exactly expected in my weekly forex forecast. As you can see that there is this is the resistance here, okay, with this gold created a level of resistance. Now This is where we have seen that the back-to-back two long wick candle created. With this doji, the price has broken out after grabbing liquidity, a big break to the upside. Now with that breakout, what we have seen that smart money, what they did from this level, they are interested to sell. They're interested to sell, has broken up. Now what happened is that the price has come back to the same level with this long wick candle. Now you see that the price has penetrated that zone and immediately has gone up. This is where the liquidity grab is. Why? Because you can see that this is the zone where back to back quite a few dojis, and that doji is where the huge liquidity penetrated. You can see quite a few candles. This level is broken to the downside. There's a huge liquidity, as when everyone was buying this market, there's a lot of stop loss in this zone, and with that long wick candle, gold has broken to the upside, and this is where the huge liquidity, and this is where the smart money buy this market. I strongly believe that you now understood clearly the smart money concept, how you can use in your trading. If you still have any question, don't hesitate to ask me in the comment section, and also don't hesitate to watch these two videos as well. They will really help you in your trading. Thank you very much for being here. I'll see you soon in my next video.